Elon Musk says this October 10th robotaxi event is going to be the most significant event for Tesla since the launch of the Model 3. There is growing speculation that we're actually going to get the first robotaxi ride that takes place, and this would be a massive deal for Tesla. Just imagine that. If we get a front page view of the first robotaxi ride. I mean, half of Wall Street doesn't even know what FSD is like. The other half of Wall Street that does know what FSD is like still thinks robotaxis are many, many years away. If Tesla does showcase the robotaxi potential on October 10th and actually gives us the first what could be paid robotaxi ride, there's no holding Tesla stock back. Tesla stock is going to rally something fierce. Now here throughout this video, I will go over all of your biggest news stories today for Tesla and what's going on in our markets, because we did have CPI, we did have an event from NVIDIA that did also move markets. Tesla stock is currently down about 2.5% at the time of recording this video because of this. First off, let's start with inflation, your big data today, and Nick Timmerhouse shares the numbers. Core inflation was 3.2% in August, the lowest since April 2021, but up 0.28% from July, a touch higher than expected due to a firm shelter reading. The 6-month annualized CPI rate decelerated to 2.7%, the lowest since March of 2021. The 3-month annualized rate was 2.1%. So basically what this means is if the last 3 months of CPI were to come in the same over the next 9 months, 12 months from now, we would be at 2.1% CPI. And the expectation from your major banks, you can see here on screen for core CPI month over month. That's the one that really matters. On the low side, you had TD Securities at 0.14%. On the high side, you had Wells Fargo at 0.25%. That means all of these estimates were wrong. CPI on the median forecast was 0.20%. So it actually comes out not as a rounded decimal, but as an actual decimal, right? So it came in at 0.28%. So it did get rounded up to 0.3%, but it was higher than the median forecast by 0.08%. So today's CPI report really wasn't the low report that we thought it could have been. Nick Timmerhouse says a bigger increase in cyclically sensitive shelter prices in August will make it harder for Fed officials to shake reservations about starting rate cuts with a 50 basis point reduction next week. Which that's actually good, because if the Fed starts with a 50 basis point cut, the only 2 times since 1995 that has happened was 2001 and 2007. 2 years later, in 2007, markets were down 26.3%. 2 years later, in 2001, markets were down almost 31%. And even 4 years later, after 07 and 01, markets were still negative. Vice versa, in 2019, when the Fed started with a 25 basis point cut, 2 years later, markets were up 54%. In 1998, when the Fed started with the 25 basis point cut, markets were up almost 41%. And in 1995, when the Fed started with a 25 basis point cut, 2 years later, markets were up almost 73%. So historically speaking, you want a 25 basis point cut, not 50. Good news is today, you can see there's only a 16% chance of a 50 basis point rate cut and an 84% chance of a 25 basis point rate cut. So following this CPI report today, it looks almost certain that we're only going to get a 25 basis point cut next week, which should be positive for equities, versus the alternative, which was 50 basis points. And no, I'm not saying markets are necessarily going to rally higher on the first Fed cut. In fact, it would make sense if the markets actually sell off with a little bit of fear that maybe the Fed is behind the curve, maybe the economy is weakened and the Fed's cutting into a weakened economy. It wouldn't surprise me if markets sold off, but it's a much better sign, historically speaking, if the Fed starts with 25 instead of a 50 basis point cut. I do have a little bit of good and bad news also embedded in this CPI report itself. As Liz Young Thomas writes on X, core CPI came in slightly hot at 0.3% month over month versus the estimates of 0.2%. Shelter was the big driver, as it came in at 0.5% month over month and was responsible for 87% of the month over month increase in core inflation. So you can actually see here that core goods was negative, so in deflation. Core services ex shelter was only up about 0.08%, and it was all shelter that pushed this thing higher. You could see this in purple. Actually, let me just make sure you guys can see this well on your screen. Let me go ahead and do this. I mean, look at this. Okay? It's all shelter. Okay? Literally all shelter here. Core goods, negative. Literally negative. This is like 0.08. It's the shelter. So a little bit of good and bad news here. The good news is it might be easy for the markets to kind of brush this off because it just was shelter that caused inflation to come in high. A bad news is inflation is really a barometer of economic activity, of the consumer and the willingness of consumers to spend money and for companies to pass on costs to consumers. So when you have high inflation, that means people are doing well, they're employed, they're able to pay higher cost. When you get deflation, when prices are actually negative, you tend to see a consumer that's pulling back, that's not spending as much, a consumer that's in a weakened place. Now, these numbers perhaps are not sound the alarm bells, but they are not good, okay? They are concerning from the standpoint of, is the economy weak? And definitively, you can say from this data, it's not strong. And that was really, the same situation we were in last month as well. Really, last month you had steeper deflation in core goods and slightly less inflation in core services. This month you have slightly more inflation in core services and less deflation in core goods. So the last 2 months, CPI, pretty similar in that sense. Really just housing that is starting over the last 2 months to push this CPI, core CPI number up again, which is unfortunately something the Fed really has no control over. The Fed this time around is not affecting shelter inflation. So really, from this perspective, I don't think the CPI gave us too much besides shelter is running hot. And the way they calculate shelter inflation is asinine anyways, basically surveying homeowners, asking them what they can rent their home for. And just the cost of living going up in general. When food prices go up, people think they can rent their homes for more, right? It's just a flawed way of calculating things anyways. And actually, when rates start to fall, you should see shelter inflation fall as the cost of a mortgage does go lower. Theoretically, people should assume that they're going to rent their home for lower as the mortgage cost goes lower. So from the overall standpoint of our markets, I don't think the CPI report really confirms anything. I don't think it confirms a crash. I don't think it confirms a rally. It does just make the Fed's meeting next week a little bit more important because now the Fed's basically handicapped to 25 basis points. If they were to do 50 instead, that would be a bigger issue, I think, for the markets. The question now becomes, how strong is the economy? Are we really heading for a soft landing? And although the CPI report shows weakness in the economy or implies weakness in the economy, we don't know if it's recessionary or if it's just a normalization, as Wall Street has put it. Funstrat's Tom Lee says mid-cycle rate cuts equal winner filet mignon dinner. After the rate cut, the SPX is higher every single time, 1 to 12 months later, and I like steak but no veggies. Now, the week after, you're usually negative 0.1% with a win ratio of 67%. 1 month later, you're up 5.1%. 3 months later, you're up 9.7%. 6 months later, you're up 14%. 9 months later, you're up 16%, and 12 months later, on average, you're up 16.5%. But I think it's way too soon to really draw that conclusion that we're cutting into an expansion. We could be cutting into a recession, and I don't think it's soon enough or early enough to draw that definitive conclusion. As Chris over here on X comments, he says, sure, man, and points out the seasonality of September. September tends to be negative, and October tends to be negative as well, especially during election years. October can actually be a really bad month. It also depends how the Fed kind of gives us that cut. If the Fed gives us that cut, and they sound cautious about the economy, that's going to be negative. We also have the dot plot coming out on September 18th as well next week. And that's where Fed officials, they jot down where they expect federal funds rates to be, GDP, unemployment. If the Fed starts to signal an even steeper rise in the unemployment rate from here, even worse, economic growth, then that's something the markets will also take a key to and say, is the Fed kind of forecasting a hard landing? And I don't think, numbers are going to be that bad. I don't think the Fed's totally going to flip-flop from the last dot plot they had in June. But it's possible we could get some weakness showing through from that dot plot, and that could turn even a 25 basis point cut into more of a, hawkish 25 basis point. Now, Tesla stock at the time of recording this video is not only down 1.74%, you have had quite a recovery. You did find some support around this 20-day moving average, around $216 per share today. It does look like you are finding resistance and or got rejected around this 50-day moving average today, around $224 per share. So to see if we can retake that today, or really throughout the rest of this week, will be important. If we retake that to the upside, then you could be in a position to see a larger rally. As I talked about in the last video, you do have what looks like a short-term cup and handle formation that looks to be forming, which could break us out into potentially even the 240s or 250s. It wouldn't even surprise me by the end of this week or early next week, especially if the markets get behind this whole soft landing, Fed cutting rates kind of, thesis. That's where Tesla's really going to accelerate. Now, here on the day today, you can also see a lot of shorts covering. You have 878,000 shares that are being returned and borrowed shares at 47,000. So that means on net today, it looks like about 831,000 shares are actually being covered on today. Now, short interest of free float sits at 2.96%. You have $18.58 billion currently sold short in Tesla stock, totaling 82.14 million shares. Option activity in Tesla stock today is on the more negative side. You have seen 4 different trades totaling $415,000 with a positive order value of 26%. Tesla is planning on turning a vacant Kmart building in North Hollywood into a showroom. I thought Kmart went bankrupt a long time ago, so this thing must have been sitting there for many years. I mean, there was one Kmart that I used to go to when I was like 5 or 6 years old. So yeah, it's probably been like 20 years since Kmart started closing down their operations. The Irvine, California Police Department has spent $150,000 to buy a Foundation Series Tesla Cybertruck. It will become part of the department's drug abuse resistance education the Dare unit. The department is spending $20,000 included in the 150,000 number for the installation of unspecified law enforcement equipment such as car lighting, radios, and exterior graphics. The truck will be outfitted by Upfit Tesla, a division of Unplugged Tesla. And Tesla has officially confirmed that the robotaxi unveiling event on October 10th will be in Los Angeles. Sign up for the Tesla stockholder platform for a chance to attend. They will hold a random drawing. Each share you own will be an entry into the random drawing. Tesla will begin communicating results the week of September 23rd and will provide more details when they issue tickets. Space is apparently extremely limited. Lithium carbonate prices in China have fallen to a new multi-year low and are now down 88% from their November 2022 high. Elon Musk is responding to the news that Kia is essentially poaching Tesla owners, offering them up to $1,500 to switch from their Tesla to a Kia EV. Elon Musk shares this post from Sawyer Merritt and says, "But here's the rub. Tesla never has had to bribe Kia drivers to buy a Tesla." As Simon Hale says, responds to this post, a senior portfolio manager at Wellington Altus Private Wealth, says, "Publicity stunt, in my opinion. Who in their right mind would trade their Tesla in for a Kia? Kia knows this, but are jumping on the bandwagon of Elon bad, therefore Tesla bad, hoping it will promote their brand and new EV buyers will buy their cars." Mars Catalog writes on X that this is awesome. The news we got yesterday of the Uber app that now uses the Tesla API to send destinations to your Tesla nav. This will make it even easier to do Uber rides on FSD. The one step you had to do, entering the address, is gone. This has sparked some rumors that maybe there could be a deeper Tesla-Uber partnership coming. And, again, I think it would actually make a lot of sense for Tesla to partner with Uber because of how many people are on the Uber app. It could just be an option to, take a Tesla robotaxi, right? Apart in the actual Uber app, instead of trying to get hundreds of millions of people to sign up to a new, ride-hailing app where there may only be a, small amount of robotaxis actually operating in a certain area. Like, what would be the point of me signing up in Michigan for the, Tesla robotaxi app if there's no robotaxis in Michigan that are going to be able to take me anywhere? Why would I even get the app in that sense? But if you're on Uber and you just see the option to flip to a Tesla robotaxi and see if one's available in your area, I think that's a lot more convenient and would give Tesla a lot more penetration up front. But that's really a topic for a more in-depth video that we'll probably cover over this weekend. So if you have not done so already, subscribe to the channel, hit that notification bell so you do not miss any videos that could potentially make you money. Now, Lucid Motors has released the first teaser image of their upcoming $50,000 Model Y competitor, which is currently slated to launch in late 2026. Here on the day today, over on StockTwits, sentiment for Tesla is bullish at 64. Yesterday, you were extremely bullish at 75, but this is still a really good number. Message volume today is actually higher than it was yesterday for Tesla. Yesterday, message volume was normal at 52. Today, it's high at 56. The participation ratio today is also high at 55. Tesla's global inventory numbers appear to be falling as well. The Model Y falling to about 5,700 vehicles in global inventory. The Model 3 falling to about 5,000. The Model X at 3,700 and the Model S at 2,600. So you do want to see inventories fall, especially as Tesla is at max capacity, max production capacity over in China. That would suggest that we're not just building up inventory, that Tesla's actually selling those vehicles that they are producing. Now, a lot of people have pointed out that Tesla typically has a downtime period at the end of Q3, the start of Q4, so they could be trying to build up some inventories here. That would make sense and something to consider. Tesla continues to run about 4,000 different ads with Google, and we can see Google Trends activity looks like it's ticking downwards for the entire Tesla lineup. The Cybertruck going from 54 to 52, the Model Y going from 25 to 22, Model 3 from 22 to 21, Model S from 10 to 9, the Model X staying the same at 8. The percent of stocks currently trading above their 50-day moving average today is down to 39.1%. You have 6.2% of stocks that are falling below their 50-day moving average today. So even though the S&P is down something like 0.5%, you are actually seeing the broader markets falling a lot more. So the RSP, this is the equal weight S&P, is down 1.2% today. So a 2x underperformance of the actual S&P. Part of this has to do with Nvidia, that's up 4% following their Jensen Huang's speech or conference with the Goldman Sachs tech event that took place today. There wasn't really any standout headlines from that. I think it was just some fear that perhaps Nvidia was slowing down, their business was slowing down, demand was slowing down. Nvidia did say specifically demand is extreme, and that's why we're seeing inflation in GPU prices. But other than that, you didn't get much. So I think Nvidia is really helping to prop the S&P up today, whereas a lot of other stocks are just getting beaten down. If you want to be honest, the banks yet again getting beaten down. Bank of America down over 2% today. JP Morgan's down another 0.5% today. CVS down 3.5%. A lot of the dividend or value stocks that have been outperforming as of late are down today. And fear and greed index today is at 37, which is actually more fearful than yesterday. You were at 39. Market momentum is fear, stock price strength, greed, stock price breadth is greed, put and call options, extreme fear, market volatility is neutral, safe haven demand is fear, and junk bond demand in extreme fear. 10-year Treasury yields today are hitting 3.66%. You're actually up 2 basis points from yesterday, but this is a new 52-week low for Treasury yields today. They have since bounced back a little bit from the morning, but 10-year Treasury yields are starting to get to very low levels. The 2 and 10 yield curve inversion is still uninverted, about 2 basis points, which is 4 or 5 days now that you've actually been uninverted. So let me know your thoughts about all of this down below in the comments section. Hit the like button as well as subscribe to the channel if you have not done so already. We will talk about Tesla stock a little bit more in the next video, what could be coming next and all of that. So I recommend you guys pay attention around 8 p.m. when that video does come out, because I'm sure you are a Tesla stock investor and I'm sure, well, you will benefit from that information. So you guys have a fantastic rest of your day and I will see you in the next one.